Tom, I'll turn to you first. What should people do with their money this evening?
Well, once they get over the shock of the downturn today, it was just an all-red day looking across the board. My comments have been you can't panic at this point in time because this entire settling process is understanding what's happened in the market. Where did we get to from just a few weeks ago when the economy was running full steam? Then it came to a complete stop because of the obvious coronavirus issues. This is not a panic moment because investors have traditionally not fared really well when they've gone through an emotional exercise like selling off.
So, Mark, we may not need to panic. I think we can all agree with that advice this evening. But where's the market going from here? Are we on a slow ride back down to the lows, if not lower, as someone like Jeffrey Gundlach has suggested today?
Well, Scott, if we look at history and if, in fact, past is prologue, we could take anecdotes from other events that have occurred where we've had similar waterfall-like declines, leading from peaks to troughs, which put us into bear market territory. We've down now 34% through last Monday's close, which is fairly typical in the midst of a recession. So we've seemingly discounted most of that. But we also know that oftentimes those declines, those precipitous falls from the peak, are often then followed by a ricochet rebound. In fact, what we've seen is almost tailor-made in terms of 17 to 20%. Obviously, it occurred concurrent to the end of a quarter, so you had some rebalancing going in, which probably boosted the returns even more than what would otherwise be typical in a kind of a bear market bounce. And often you see a follow-on retest where, more often than not only is the previous primary low touched, but it sliced through, not necessarily deeply, but enough to suggest that only then we've seen that kind of capitulation low, that panic liquidation. The weaker hands have been shaken out such that a more durable bottom can be formed and therefore lead to more sustainable and healthy advance, leading to perhaps the early innings of a new bull market.
It's hard to think about a new bull market at this point, Tom. Do you think we're going to have a V bottom?
I don't think it's going to be a V bottom. I think there's too much emotion in the sell-off, but I also agree with what I just heard. And I look at this, and it's hard not to be emotional in a market that's had such a drawdown over such a short period of time. But this is the point where investors need to look at what they hold. And there's just so many chances to buy into quality that are considerably cheaper than they were a month to 2 months ago.
Yeah. Gentlemen, it's good to talk to you tonight. I appreciate you both being with me. Mark Luschini, Tom Stringfellow for us tonight.